Alright traders, I'm back again with another video. This is my first video for 2013, and hopefully there's going to be a bunch of videos for 2013 for me. But we're staying hard on that euro. We've been on the euro for a little while, so this is another video with the euro, and I'm going to show you why I'm on the euro, because I made a couple trades and I'm in a trade right now. And basically you can see my profit right now for 6.8 pips. But here's my last trade. I just took a trade a little while ago when the market opened last night, and I got 73.5 pips on that. And then the market came all the way back down. But see, this is the daily time frame, so we're looking at the daily time frame. I don't want you to be closed mind to the things that I've been telling you about the euro going long, because basically we can pull back to a couple levels here, and one level is this support line right here, which is held from this you see it got hit 3 times, and it's based off of this ascending triangle pattern that I made. But basically it's this just a horizontal support level right here, and it's holding right there at what's this level? Basically this level is around 31.4, 31.5. Also notice the Kijinsen right here, the daily Kijinsen. This will be a 50% retracement of this move from the low here to this high here, and then 50% retracement right to here. The market likes to retrace 50% a lot of times, not most of the time, but a lot of times you see a 50% retracement level, 38.2 retracement level, depending on how you draw your fibs. Okay, so if I draw a fib from here to here, from this low here to this high here, this will be a 50% retracement level right there, and that's where this daily Kijinsen is. So be aware of that level, because when we go to the 4-hour time frame, when if the market does pull back, that's a level that it can pull back to. It's going to be a very strong support level. And then also you have your trend line here, and then your cloud. Those are support levels. But this is on the daily time frame, so let's take this to the 4-hour time frame. I don't know if we're going to get there the way this computer is going. Here we go. Be nice to get another computer here. Eventually I will, but right now we're looking at this Ichimoku on the 4-hour time frame, and you can see that it's starting to have a lot of bearish tendencies, but we're still in this range, and we're in the cloud. Now it looks like price came down to the cloud, the last final support level, and held, and it looks like it's trying to move upwards. Now what I've done, that range that the market was in, and I'll show you where that range is. Basically I had the market in this range right here. And two things I have done. The market came down here right now and bounced off of that level, so I put an order in for a long entry, and quite possibly to go back up to this level. Okay, so I have that entry in right now. Now the next thing, I took a trade for 73 pips right here, you could see, and what I did there, it was on this candle here. Price came down, and then I took the trade long to go back up to this level. So when price got back down to here, I took the trade long again, and we got there. When price hit there, I got out of the trade, took my profit, and I figured if price closed above there, then I will get back in. But price didn't. It bounced off of there, so I had my profits, and it bounced off, came back down. Now if I was trading, I could have traded short here and went, yeah, here's the candle that I opened up on. There it is. This is showing you. There's the candle right here. We opened here, and then we took this and went to here, and then price came back down. Now price is here, it's bouncing. Maybe it goes back up. Boom. My risk is minimal, because I just will take from here to here for a stop loss. Now probably the market could, if it wants to retrace to the 50% retracement level back to this daily Kijinsen, and you see that right there, and that's going to be the strong level of support. So if the market breaks through here and you see a market, you see a Kumo breakout, let's remove this. You see this Kumo breakout here, be aware of these levels. This level is going to be strong, and so is this level. So you'll be looking at, oh, we got a Kumo breakout, but boom, your market only comes to here and goes back up, or it only comes here and goes back up. But then there's also this possibility of the trend line here from that daily ascending triangle pattern that we had here. But be aware of that. But everything on this 4-hour time frame is starting to have bearish tendencies. But like I said again, let's look at the things we have here. The Kumo prices in the Kumo. So right now that's non-tradable. Really, it's supposed to be non-tradable on the Ichimoku system. But drawing that, looking at that range that the market is in, I took the trade based off of that. And then also you got this Chiku span just trying to get below price, and it almost really is below the price. So that's a bearish signal. You got a TK crossover. It's going back and forth, back and forth. So that means the market's ranging pretty much when you see that, or consolidating. Then you got this Kumo twist, which is a bearish signal here because it's turning bearish. So all the signs are bearish except price right now. Price is in the middle here. So price isn't telling us anything right now. It's just telling us that it's consolidating or ranging. And when it breaks out of that cloud, then it'll tell us that it's all the signs will be bearish then. But still, you have to be aware of these support levels. So that doesn't mean just because we break these support levels, we get through the cloud, doesn't mean that it's going to be a good trade, because we have to be aware of these levels. Now, I myself, even if it breaks through this cloud, I'm not going to take the trade, because I want to see it break through this level. And then I'll be convinced that it's going to become bearish. If it can break this daily Kijinsen, then I'll be convinced that it may ride down to here and even break that. You start looking at these price levels where it came down before, so you start looking at maybe this level. But if price doesn't break through there and stays in this range, the longer it stays in this range, it gets back up near the top here, and then it breaks out, and we have our long trade to the levels that I told you. Okay, so that's all I'm focusing on today, and that's all I really wanted to talk about. I wanted to show you those trades. Like I said, I'm going to trade now because I took the trade off of the bounce of the range, the bottom of the range, which is the support level. So I took that, and right now I have 5 pips. And this one here, I took the bottom of the range again before, so that was a 73 pip target. So we'll be looking for the same thing. Look for price to get back up here, and then if price breaks up out of that range, we could be in for a good run. Looking at the videos that I showed before for targets on breaking out of that range. But traders, other than that, just a little short video. Wanted to show you some ideas and some things that I'm looking at right now. Hopefully I'm helping someone, just trying to be a blessing, and that's about it. Traders, until next time, God bless.